You're dealing with all of the major supply centers throughout the industry that are not sovereign mints, are either not taking on any new business at all or massively backward. And so this is a problem because what I have been focusing on, and again, for the past year and a half, because of the inefficiencies of the sovereign mints, has been bars from these mints, from these private mints around the world. And so when we see this type of supply chain issues that I've been talking about for a long time, it starts to get me quite nervous.
Hi, I'm Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for October 18th through October 25th, 2022. This week we feature 2023 Britannia in silver and in gold. Though the UK's Royal Mint has finalized a portrait of King Charles III and has started minting commemorative coinage with his image, the Mint made the unexpected choice to issue this first run of 2023 Britannia, still bearing the portrait of Queen Elizabeth II. The silver Britannia comes in tubes of 25 and mint fresh monster boxes of 500 coins, and is available at only $7.50 over spot. The gold Britannia is $85 over spot while this shipment lasts. And on that, both last week and the week before, we sold out of our 1 ounce specials by the Friday of their respective weeks. So if you'd like to ensure that you secure 2023 Britannia at this special rate, please don't delay. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us every Tuesday for a weekly market update and special whenever we can. And he's here with us this October 18th, 2022. Andy, thanks for coming back on Liberty and Finance.
Good to be here. And again, good to be vertical. Hope you're doing well.
I'm glad you're vertical too. I am doing well, thank you. And it's quite interesting because I think we have a lot of devoted viewers because more and more of the client calls I receive start out with something like this. Do you have any silver left? So I think that the message has been getting through that there are real, honest-to-gosh challenges in the silver supply chain that are affecting availability of product both now and going forward into the visible, the near term and midterm future for retail investable silver products. You've got some new information on that. We'd love to get your update.
Sure. We've been talking a lot about how the silver held in the vaults and the LBMA are the lowest they've ever been since they started keeping track of the number of ounces in 2016. We've talked about the same type of action on the COMEX, massive deliveries coming off of COMEX to where there's only 40 million ounces in the registered category, which is, well, let me put that in perspective. India imported almost 37 million ounces of silver in August alone. So in 1 month, a country imports as much silver as is backing delivery of all of the open interest, which is almost 1,500% rehypothecated. So in other words, the open interest is 1,500% greater than the number of bars backing it in the registered category. This is not a very good situation when you talk about from the top down. And I want to read something to you to give you a synopsis of what this industry is dealing with in terms of inventory. And this comes from a very reliable source who I do business with, and they wanted me to understand why it is so difficult to get products. So I'm going to read through these, and everyone out there can maybe understand what's going on. He says, wanting to help you with to show you with what's happening. He says, here are 10 or so examples of what we're dealing with. He says, Umicore, one of the world's largest precious metals recycling businesses, is over capacity, and they won't take on any new accounts, even though they have tried for years to get us on board. Asahi won't take any new customers as they can't fulfill current demands. Metalor wanted our business a few months ago and now cannot accept any new orders. The Geiger Mint in Germany, no more capacity. In Turkey, many of the mints have been experiencing political issues at the moment and cannot get product out. PAMP is not giving new allocations probably until December or January. Valcambi is holding off all new allocations as they are concerned about energy availability this winter. They are not sure they will be running at full capacity. Fortunately, we have product from them coming on their next allocation, I will add. The Mason Mint, which we have some product in, their numbers are very small, will not take any new orders. The U.S. Mint, you know as well as anyone, he says, and all the other sovereign mints. So you're dealing with all of the major supply centers throughout the industry that are not sovereign mints, are either not taking on any new business at all or are massively backordered. And so this is a problem because what I have been focusing on, and again, for the past year and a half, because of the inefficiencies of the sovereign mints, has been bars from these mints, from these private mints around the world. And so when we see this type of supply chain issues that I've been talking about for a long time, it starts to get me quite nervous. And I think, I've been trying to reflect as to why this is happening. And, look, you've got inflation at 40-year highs that isn't just isolated here in the United States. You look at the United Kingdom, they're a basket case. You look at Australia, they're in trouble. You look at Western Europe, they're in trouble. You look all around the world, and people see inflation. They see geopolitical issues. They have just come out of a pandemic. A lot of people don't trust their governments. They see governments rushing to the bottom and currencies devaluing. They see chaos, I guess you could say, anxiety, stressfulness. Even if they can't quite articulate what it is, they don't feel things are right. And you have awoken, I believe, a whole generation of investors, not just in North America, but globally, that are all competing for a tiny bit of gold and silver, when for the last few years, it's been the mission of every country around the planet to print as much money as they possibly can, while trying to fool us all by keeping the measurements by which they gauge inflation off or skewed. And so even if the numbers are not supporting the way people feel, I think people understand something is not right. And you all of a sudden have more competition globally for a very small pool of gold and silver. And it's getting real. And this is what I've been trying to tell people about for the last 2 years. Now, will we see it ease, and will we see a refreshing of supply? I sure hope so. We always have in the past. But this is different than anything's ever been in the past. And yet we still haven't really awoken the mainstream. We're getting periphery. More and more people are waking up to it. But when the real mainstream wakes up to whatever event it is that triggers their desire to purchase precious metals, it's getting harder and harder and harder and harder to get. And that's really what I've been saying. That is the event that I'm looking for, where it just goes unobtainium. And I hope it's not for a long time, but I will tell you that I have never seen anything like this, with the exception of '08 when it was all gone. And one way to gauge if this is going to let up into 2023 is to see what the pre-order shipments or the pre-order cost is for like the 2023 Silver Eagles. If you look at the 2023 Queen Elizabeth Britannia that we are specialing this week, specialing at $750. I mean, doesn't seem like things are changing to me. The Britannias, the Maple Leafs, the Philharmonics, the Krugerrands, the Kangaroos, not only are they literally as rare as hen's teeth these days and impossible to get in any quantity with any sustainability. In other words, by the time they come in, they're usually sold out. We're waiting on the next allocation. But their premiums are roughly 3 times what they've been my entire career. This is with just the periphery interested in precious metals. And there has been, I think this third quarter has been incredibly busy. There has been an increase in interest, an increase in anxiety that I feel from the people I talk to, where they really have no patience for any type of delay whatsoever. They want it now because they fear this imminent event is coming. And maybe they're right, don't know. All I can simply tell you, Dunnigan, is that, and I take no pride in saying I told you so, but I told you so. This was coming. And I think this is not even what I told you was coming. What's coming will be much worse than this, because here again, the amount of people who buy gold and silver, as I've always joked about, are the pimple on the elephant's rear end. When the elephant turns around and says, my goodness gracious, I need some metal, we're all in trouble if we want to try to get any more. And I think that will ultimately be a problem when there is an event that I can't help but think is coming. Not sure what it is, how it happens, what triggers it, or the extent or duration of it. But I do think that something is coming based upon all of the things I see and have been talking to you about for the last 2 years. And when that event comes, that rattles the elephant, shakes the elephant, because the elephant has been busy eating and drinking and having a good old time. But all of a sudden, it's going to get rattled. And when the elephant gets rattled and turns around and says, I need some gold and silver, there's going to be a big problem, because the elephant has a lot of money. And this is a market that we've talked about, we've joked about, we have thought every single possible outcome about, you and I, both on and offline. And if a $5 or $10 million deal is becoming very difficult, really difficult, what happens when you see 20 of those, or 50 of those, or 100 of those? Or 1,000 of those industry-wide? I mean, gone. And that's what I'm most concerned about.
There are several things you mentioned I want to follow up on really quickly. You mentioned about strains emerging in the silver supply chain. We did an interview several months ago with Australian economist John Adams. It was called Something's Fundamentally Wrong in the Silver Market, and he had created a infographic that showed the entire silver supply chain, from mines to smelting to refining to wholesale to the major exchanges to the pre-manufacturing of semi-finished goods to the finished good minting to the final retailers. And he picked out 6 different strain points. I'm going to put a link to that video in the description of this video so people can understand that's the big picture. I keep having client after client ask me what's going on. That he does a great bird's eye view of the big picture. Secondly, I noticed Patrick Vieira, the host of Silver Bullion TV, just put out a notice on LinkedIn saying, I say we have bifurcated. We just don't realize it. When we look back in history, I truly believe this is the time we will pinpoint where paper price and physical price separated. Physical would need a new price discovery and a new spot price, my opinion.
What better time to issue the new Moscow Exchange? And that's their premise itself, in that if the Moscow Exchange were to launch tailored to all of the Eurasian nations that have not only spent the last several years accumulating gold, they are the largest accumulators, the largest purchasers of it, the largest miners of it, whatnot. If that were to happen and they were to set the spot price of gold, let's say at 2,500 or 3,000 an ounce, set the spot price of silver, let's say at $50 or $75 an ounce, in a matter of seconds, you'd see arbitrage, and everything would be pulled off of the exchange that would be allowed to in the West and sent directly eastward to capitalize on that spread, that bifurcation, as Patrick, one of my favorite guys, mentions. And I think he's probably right. I mean, we are seeing a massive distortion or discrepancy or delineation between spot and between physical product. And so if you were to see an exchange that would actually properly reflect what metals should be, rather than allow this manipulation where the open interest in silver can be 1,500% greater than the bars backing it, then we would have a real market, not one that is make-believe. And I think it would very quickly create havoc for the LME and for the COMEX. It would render it completely and totally neutered or obsolete. So, yeah, I think Patrick is right. You take a look at a Silver Eagle selling at $16 or $17 over the price of silver. You look at Gold Eagles selling at 11 or 12 or 13% over the price of gold. in many respects, you're beginning to see this. And even when you go all the way down into 100-ounce bars, selling at roughly 4 times the premium I've ever sold them for in my entire career. So, yeah, it's happening. And it's one of these deals that I think not only is it happening, I think we haven't seen anything yet. When it really gets tight, those premiums will only go higher and higher and higher because you're talking about a very small pool of available metal.
That's where I think, back to my preparedness roots, we always talk about being the gray man. I'm trying to condense this down, but basically I talk to old timer clients who call me back and they've been stacking metal for 40 years or 30 years or 20 years or whatever. And they go, oh, I never pay more than fill in the blank, $1 or $2 over spot or whatever. And so I'll just wait because this market is too rich for my blood or whatever. And I understand when you have runaway bubble markets, but I don't think we're even, when you have less than 0.5% of investments in this entire class of assets, I don't think you can call it a bubble market. I think it's a fundamental exposition of the underlying basically repression that's been happening, and that's where that bifurcation is coming from, because the physical just can't change hands. People are not willing to accept that artificially low price for the exchange of physical. Another thing that you mentioned, arbitrage and bifurcation. I just want to remind people what you talked about too, the little man rule that you learned in Econ 101 about the little man always loses, because by that time the big players already positioned themselves. I recall back in the COVID collapse thing, and then the immediate basic government bailout programs that were coming out. So one of them was this PPP program for a small employer to apply for all this money to help and everything. And our accountant said, don't worry, we got you covered. We're going to apply, la, la, la. Our bank said, don't worry, we're going to get you covered. We're going to apply, help. By the time our application got in round 2 or round 3 or whatever, they said, oh, the money's all gone. What? And they said, yeah, well, these big companies were in there first, and they had all these teams of lawyers and teams of accountants, and they had it all figured out, and they cleaned out, so there's no funds available. So everybody who's thinking as a small timer that you're going to execute your brilliant plan when prices get smacked down, or when finally people realize that it really is go time because the stuff's about to run out, or this arbitrage opportunity pops up between real physical prices versus artificial paper prices, don't think that the little guy is going to be able to execute at that point, because the big guys will already have done it. So that gets back to the preparedness aspect of being the gray man. You're so much better off in the calm times, in the boring times, in the not popular times, just chipping away, getting what you can, and then you got to kind of just sit back and let the crowd fight over the last roll of toilet paper on the shelf at the store, and don't be in that feeding frenzy.
Yeah, well, Dunnigan, I mean, to your point, last week, 5% of all the good delivery bars were delivered off of COMEX in gold in one day. In one day. And if you go back a few months ago, 40% of all the kilo bars on COMEX that I think back the mini contracts, 40% were delivered in one day. You look at the amount of silver being drained off of the LME and off of COMEX to record low levels. Well, who's taking all of this metal? Where is it all going? It's the people who are closest to the information. It's the biggest money in the world. It is repositioning using the cover of suppression in prices to drain the exchanges. And don't think that these people don't understand how powerful the suppression of price is. And, because they realize that most people don't look underneath the hood. You talk to someone who understands silver and they'll be voracious about its virtues. You talk to someone who is a financial advisor who is very well versed in finance and in economics, and they'll say, well, the price hasn't done anything. It's a piece of crap. Why would you buy it? This is the distinction, is that even someone who's highly educated and is very proficient in economics, if they don't look under the hood, if they just simply look at the price the way most people do, it allows to easily misdirect and manipulate. And that's exactly what is happening. If I didn't see, and really since 2020, when we started talking about the rise of the others, this group of very knowledgeable private traders thought to be sovereign wealth funds and family offices, if I did not see them systematically draining the exchanges of metal since 2020, I would have been less optimistic and bullish about where metal is going, but it is very obvious to me, along with many of the other things that I talk about to you, that they are using the misdirection, the suppression of the metals prices in order to literally drain them dry. And that isn't hyperbole. That's not. This is happening. When you can see as much silver delivered to the country of India in 1 month as is backing the entire price setting mechanism of the globe, there's a problem. And I think the same thing can be said of the LME. When you have the lowest amount of silver backing the LME than we've ever seen. And this is probably, now I'm just a little bit of a supposition here, because of all of the exchange for physical, where companies or traders have COMEX contracts, and instead of standing for delivery and bleeding COMEX dry, which is a little bit more obvious, they exchange it for physical, and that physical is off the London Metals Exchange, so they can pull it off over there in a little bit more private fashion. Any way you look at it, the biggest money is doing exactly what you're saying, not only in silver, but also more recently here in gold. And so it's happening where we all wake up one day and say, geez, how'd that happen? And the people who have prepared, who have used the cover of manipulation or the manipulated prices to accumulate copious amounts, while most people in this country wouldn't have a clue what you and I are talking about right now, COMEX, manipulation, what are you talking about? They're using this rhetoric or the lack of discussion on this topic where it should be talked about. I mean, the fact that you have these situations and our media doesn't cover it at all, maybe that actually is more reason to believe that this is truly happening, that the insiders, the big money, the fact that only 4 companies control every media outlet in the United States, radio, newspaper, magazine, television, you name it, the information that is being fed to us is filtered for a reason. Maybe everyone up at that level is in on it. Maybe they are, maybe they're not. I don't know. But what I can tell you is that it's disappearing in ways that I've never seen. And it's starting at the top from the biggest exchanges in the world, which are being bled down all the way down to the retail market, which, other than where everything was gone, is it's just it's unlike anything I've ever seen. The cupboards are really bare, and I'm concerned what it looks like into the last month of this year. I think that there may be a little bit more coming in through November, but you get through Thanksgiving, and I don't think you have a snowball's chance in Haiti of getting anything substantive before year's end. And I think that's what people should really be prepared for.
In the face of that, business continuity is another specialty of my former career as an engineer. We've talked about this before. Clients keep bringing it up. They go, how in the face of disappearing product inventory are dealers like Miles Franklin even possibly going to be able to continue to operate? I will say, for example, our 2 cars, we have a Subaru and a GMC, both of those showrooms were empty for 2 years, and their lots were almost empty. And I saw the salespeople sitting around. So as a salesperson for precious metals, it makes me wonder too. And as an owner of a dealership, I ask you again, what concerns do you have about business continuity in the face of lack of inventory, and what workarounds are you scheming to potentially alleviate some of that dry spell?
I guess I could become a hell of a golfer. I live on a golf course. I hope it doesn't happen that way. Look, and I've often talked about the fact that, I think we're in a bull market in metals. Whether or not the price really supports that statement is irrelevant in my mind, because I see the demand. And just looking at demand in this industry, it is incredibly bullish, more so than anything I've ever experienced in 33 years. And the price will ultimately reflect it. And we've talked about the reasons why I believe it will, most of it emanating from across the globe and the actions and things that the BRICS nations are doing. But people don't want to go back into dollars. No one wants to sell the metal that they have for profit. And that's really the difference between a bull market in metals and a bull market in equities, is that in equities, you're taught to pair off your winnings and redeploy it into another place or another equity or whatnot. But in precious metals, the idea of going back into fiat, going back into mainstream investments is something that no one who buys from me would ever entertain. Virtually nobody sells anything these days. I mean, with Silver Eagle premiums as high as I've ever seen them, both on bid when you sell and ask when you buy, we still can't get people to really sell us Silver Eagles. Same thing is true with junk silver. These things are becoming really, really, really hard to get, and even jacking premiums up on the bid side really doesn't do much to pry it out of the system. So that's a big deal when you talk about if the sovereign mints run out of product, if the refineries, like I spoke to you about at the beginning here, just can't deliver based upon not only demand globally, but demand regionally. A lot of these refineries and a lot of these sovereign mints are across the Atlantic. Most of them are. And so you're dealing with a situation where these countries are going to, just like mines get nationalized, you could see mints get nationalized, or refineries say, you can't sell to anyone outside the borders. I don't know. Is that possible? Sure. Why not? Depends how things get. And when you see more and more and more people around the globe waking up to protecting what they have, watching it inflate away, these types of discussions become more and more obvious. What type of workaround? I don't know what type of workaround. This is why we bought a machine that makes 10-ounce silver bars. This is why we're buying a machine that makes 1-ounce rounds. We'll do the very, very best we can. But the real problem, more than anything, is that the people who have accumulated gold and silver and have hung on through all of the ups and downs of the last several years, I would argue, have pretty darn strong hands, and they're not looking to make a profit. Look, maybe if gold goes to 5,000 an ounce and silver goes to $80 an ounce or whatever it is, you'll get people selling and cashing in and profiting. But if things were to stay the way that they are, yeah, it could be just like that GMC dealership for a period of time. I hate to say it, but it could. I mean, let's just call a spade a spade. It is possible, and it's not like you can just go create gold and silver out of thin air. If it's not available, it's not available. Let's hope that it becomes available. Let's hope that it loosens up a bit. But honest to God, I am beginning to wonder if this is just the new normal. And the new normal works. It's tough. It's annoying until the elephant comes in the room. And then the new normal, you can throw that right out the window.
As you know, about 3 weeks ago, my wife and I were in Central Florida there, and we Hurricane Ian basically went right over us. Luckily, we were far inland, so we weren't affected by some of that serious and deadly flooding that affected the coastlines, especially on the west side. But I was thinking about one of the lessons I learned from the sort of the last minute preparedness we did. So here we were away from home and went into a large department store to try to grab some stuff prior to, and the main water was all sold out. I think I mentioned to you in an earlier interview that we had to grab some really esoteric, expensive glass bottles of kosher mineral water or something like that, just because that's all that was left. But I thought about that as I was pushing my cart through the store. It occurred to me, because the shelves were at that point then pretty much bare, because I had taken the last weird stuff off the top shelf, that if somebody had come up to me and said, "Hey, there's nothing left on the shelf, but I'll pay you $10 bonus for everything in, per bottle, for everything in your cart," that at that point I wouldn't have sold to him. Because it's like, if I did that, then I wouldn't have it. And I had to have it. I had to have the thing. And I had it. At the price. I didn't care about the price. The price was, I was going to come home and I was going to say, "Honey, here's the water." And not, "Honey, I sold the water to another guy who gave me some money on the side." And I thought about that in terms of that lesson learned, how you'd extrapolate that to big things that have happened in history. Like, we sold Noah's Ark coins just a few months ago, right? And Noah's Ark is a perfect analogy for this. Noah, when all this trouble to build the ark, and then starts raining, and he and his family and all the animals get on, and then if his neighbors start shouting, hey Noah, we've seen the error of our ways. Here's a bunch of money. Can you get off the ark here and we'll buy it off you? No way. He's not.
Yeah, we'll pay you triple what you paid for it. No, that's okay. Thanks.
Yeah, it doesn't matter. They could name any price. It wouldn't matter. He wouldn't give it up. And then Joseph, son of Jacob in Egypt, the Pharaoh had these dreams about 7 years of fat cattle and 7 years of scrawny cattle and so on. Joseph correctly interpreted the dreams that they were going to have 7 years of plenty followed by 7 years of famine. So Pharaoh put him in charge of storing up all the grain in these huge silos. They built bigger silos than they'd ever had, stored more grain than had ever been stored in the history of the world for 7 years. You could call that foolish. But what happened was there was 7 years of famine that came afterwards, and the famine struck all that whole region, not just their country. And 3 waves of things happened. I think it's very illustrative. First is foreigners came begging to buy food, and they brought money, and they bought grain with their money. But when their money was gone, then they said, "Well, we don't have any money left, but we'll sell you our land for the food." So they gave up their land and they got the food. And then when their land was all sold, they said, "Well, we don't have our land yet. We don't have any food anymore, any money anymore. So we'll sell you ourselves." And they sold themselves into slavery. So people, because they had extra, Egypt could sell this stuff. But if they didn't have extra, just try to buy something off of somebody who needs it and who has worked hard to, store it up or prepare. Very, very unlikely people are going to part with what they've prepared with and they know they need.
Well, this is why there's schools of economic theories centered around human emotion, wave theory, Elliott wave, Kondratiev wave, where human emotion dictates so much of the way that markets move. When it's unwanted, the price just languishes. But when there's a panic or when the emotion of "I need this" takes over, it becomes a very big deal. This is why you see major swings in markets that often go from undervaluation to greatly overvalued and then back again, because the human emotion gets in this. And I think when you talk about human emotion being moved by greed and by fear, the emotion of fear is much more powerful than of greed. And we've all been greedy for a long time. We have lived in a period of time where it's our birthright to live better than our parents did, where we are told to save and to invest and try to make money and live above our means. I was talking to my dad the other day, and he said, when we were young, we had one car, we had a small house, we had a black and white TV. We took one vacation, maybe a year. Oftentimes we would drive there. We didn't have a lot, but we were happy. And look at the way people are now, where they have so much in the way of debt. They're living on credit cards. They have a big mortgage. They take fancy trips. They buy things they shouldn't buy. We're now the American way is of taking on debt, and it's just a different situation right now. And I think we've lived in an era of greed, and I think that will transition very quickly into an era of fear if some of the things that I am seeing by our ridiculous politicians come true, such as the head of the American Enterprise Institute says U.S.-Saudi relations are likely unrecoverable after the White House personalized last week's OPEC decision to cut production, according to an expert cited by Bloomberg. You got 2 of the most moronic senators that I've ever seen who are bringing a bill to the House floor to sanction or to remove all of our military aid from Saudi Arabia, saying that their lack of production in oil is a hostile act. You talk about the way that when you were talking about these things that were being bled down, take a look at our strategic petroleum reserve. It's being bled down. President Trump had it to all-time highs. It's being bled down, and they want to use more of it to sway people's opinion leading in to the midterms. We are putting ourselves in a horrible position. But to see the members of the Senate Foreign Relations Committee want to freeze any military aid to Saudi Arabia, remove the Patriot missiles from Saudi Arabia and the United Arab Emirates, you have just signed the death sentence for the dollar if that goes through. We've talked about what it is that makes the dollar the world reserve currency, and it is the good grace of OPEC to value oil in dollars. Well, if every OPEC member country is now on the Belt Road and you are threatening Saudi Arabia, and I don't care what you think your policy or your feelings are about their human rights or any of those things, The truth of the matter is that because of our protection of the Saudi kingdom, which we talked about in September of last year when Russia signed that deal, that was the beginning. But now you have these idiot senators who are saying, yeah, you know what, we need to pull all military assistance, and we need to just go our separate ways, because that's a hostile act. After they will not open up the Keystone Pipeline, won't allow drilling here, do all of the things that are completely and totally stupid. And yet doing this will only incentivize a move away from the dollar. And just yesterday or the day before, in a meeting in South Africa, the president of South Africa came out and said Saudi Arabia has expressed interest in joining the BRICS nations publicly, and the crown prince, the royal prince, whatever his name is, said, yes, this is true. They are joining BRICS. They're going to move away from us. And when we do this kind of nonsense, not only here domestically with our own energy policy, but then going to Saudi Arabia and to Venezuela, asking them to help us out when we are going green, when we are ruining their way of life, when we are moving away from what they stand for. But we just need a little help here so we can get reelected, if you don't mind. I don't blame them. The actions of our politicians could not be more moronic. And something like that will be the move that wakes everyone up in a real quick way, when all of a sudden OPEC says we're done just taking dollars. And that's going to come. And when that happens, then you get this aha moment. Look, I think people need to get used to massive inflation here in the United States, because without the Saudi support, where oil can only be produced or purchased with dollars, you have trillions and trillions of dollars held abroad that will no longer have any utility, and they will come rushing back to this country. Then it's game over. For over 40, almost 50 years, our free pass, it's coming to an end then again. And America's largest export right now, sadly, is inflation. It's the dollar. And it's all about to come to a flaming end. And it'll mean much higher import prices. It'll mean that the Fed is the buyer of last resort, I guess, as they already are. Because who wants to hold our bonds when you're getting 2% with double-digit inflation? Nobody. And then the Fed will have to print more money into existence. That's how you spell hyperinflation. And I wonder how long it'll be. Truly, I wonder how long it'll be before the Saudis announce to the world that they are accepting other currencies. When you see them come out publicly, just yesterday, the day before, and say, we're done, we're going to BRICS, confirmed by the president of South Africa, the days of easy living gifted to us as the holder of the world's reserve currency are about to come to an abrupt halt. That is my projection. And watch what happens when the Fed has to buy all the bonds and all the foreign dollars that get dumped. And it'll be interesting. I think you better have some gold and silver. And it's happening. And what have I been saying? You better get it. Oh, wait, it's almost impossible to find right now. Could be a problem. Wait till that happens. You won't find anything. Nothing. And I just want people to understand that my heart's in the right place with all this. I hope I'm wrong with all of this. I would not have a problem having everyone tell me I was an idiot. Because, like I said, I have 3 young kids. I'm an American, too, and a proud one. But we have an administration of leaders that is moronic as can be and are leading us down a path of destruction. And it's happening quickly. And for them to openly say, pull all the military assistance, and this is an open act of aggression, they got to be the biggest bunch of fools I've ever seen. So that's what gets me nervous.
I think that may be overly charitable. I know I accuse Alistair of being overly charitable about bankers. I'm accusing you of being overly charitable about these official actions, because if you look at it from a deliberate, if you assume, actually more simplistically, that people are doing what they intended to do, and you see the canceling of our energy independence, and then you see the drawdown of our strategic petroleum reserves, and then you see the estranging of our main foreign source of oil, it gets a little bit closer to what came out in a recent article I just tweeted about from Alistair McLeod had put out there about illiquidity causing full-blown market panic. It says the deliberate efforts by the Fed to engineer a painful recession after they engineered the greatest/grossest asset bubble and wealth transfer in history can only be measured as either intentionally evil or irretrievably stupid. So we've got the irretrievably stupid possibility. I'm suggesting perhaps the intentionally evil option as well. Who knows? We don't know the hearts of other people, but we certainly see a pattern of events that if you were trying to design a pattern of events to bleed a country dry and to pull it down, you would pretty much follow that pattern. So anyway, you've cautioned us that things might be getting a lot tougher in the second half of the fourth quarter to find anything in the terms of retail investable metals to sell, but you were still able to scrape together a special this week. Could you share that with our viewers?
I secured close to 50 or 60,000 2023 Queen Elizabeth Britannias. I'm assuming that the reason they're making that a distinction is that this will be a short run of Queen Elizabeth coins and they'll move to the king. I was able to get them on Friday, have them confirmed, and they told me I'd have them this week, which I probably already started to receive them. But I didn't put them on my inventory sheet for everyone in our company to see because they would have been sold out over the weekend. And so we are opening that up today where we have the 2023 Queen Elizabeth Britannia at $7.50 over the price of silver. And that's a special, which is just absolutely crazy to me that is a special. Maybe this is just the way things are going to be. Maybe this is a reflection of the fact that silver is not legitimately and fairly priced. We also are going to do the 2023 gold Britannias, and those will be $85 over the price of gold any quantity. They're both truly a special in terms of their pricing and in terms of their availability. And there is no easy way to say you better do it quickly or it'll be gone without sounding like, the guy talking his book. But I hope by now people realize that that's not the case.
Well, let me reassure everyone. I just got a call this morning from a client, a very well-intended client. He says, I'm interested in those bull mint rounds, the 49 fines rounds that you had on special. And I said, I'm really sorry to inform you that the ones we had in stock sold out in less than 48 hours. The next batch that was coming in the following week sold out in the next 48 hours. So within 4 days, they were all gone. We talked about it Tuesday night that week. By Friday night, they were all gone. And here we are 2 weeks later. So this is real. I mean, this is what people are, by the time they got to jump when you have a special, because we do typically sell out within 36 to 48 hours.
Yeah, I wish that the things that I talked about weren't when they happen, that I don't take any glee in any of this. I'm not happy about any of it. I would rather talk about other things than depleted inventory. But it's real, it's happening. So yes, it is a special. We do have some other things, but the truth of the matter is that most everything that you're going to want to buy, when we sell out a product, I mean, it could be weeks, it could be the end of the year. I don't know. I mean, it's just, it's gone from getting real to now it is real. I don't think we've quite got to it's severely real. But we're close. We're right on the periphery of the severely real. And I guess we'll see how it all plays out. I think that the next several weeks leading up to the midterms, you will see tremendous volatility and wouldn't be surprised to see some sort of an event, a bond market failure, a bank failure. I don't know. I just think we're getting really, really close. So please, if you've ever believed me before, if you've ever believed anything I've ever said before, do something about it. Now, stop waiting for the price to go up or the price to go down or for whatever it is that you're waiting for. I guess the best way I could explain it is that if you've come to grips with buying a shotgun to protect your family, you don't wait for bullets to go on sale. You buy a box of bullets and then you can cost average your way through. You need the gun and the box of bullets first to protect your family. And you hope you never need to use that. Well, the same thing is true here with my metal. I hope I never need to use it. Whether it's an emergency, maybe it's there for an opportunity, who knows? If not, I give it to my kids. Well, I have a gun and I hope I never need to use it. And I think that's the way you need to look at this right now, that if you don't have your gun, then you're not protecting yourself or your family. You need to get this now and hope you never need to use it. And if you do, maybe it's for a wonderful opportunity when everything that has been so blown sky high distorted because of the suppressed interest rates and easy money, when things come into equilibrium and you find real value in real estate, in equities, in bonds, in all of these things that are impossible to discover real price, then maybe you sell your gold and silver for that, because everything has cycles. And we are nowhere near the top of this cycle in metals, but you could argue we are already past the top in bond stocks and real estate. And as rates continue to rise, whether it be at the hands of the Fed or at the hands of the folks across the Atlantic that we've talked about ad nauseum, you'll understand how vitally important it was to have that shotgun and those bullets in the form of gold and silver. So anyways, that's all I got for you this week, Dunnigan. I'll look forward to seeing you and talking with everyone next Tuesday. I do mean that I'm always here if something happens between now and next Tuesday, because so much happens between Tuesdays every week, where, there's a few things that I go over every Tuesday that are repetitive because people need to be hit over the head with what is happening, this macro trend, this global once-in-a-lifetime macro trend. But the little things that we talk about every Tuesday, 4, 5, 6 things that are new every week, it's amazing how fast these things keep happening. So if something ever happens that is truly noteworthy and we need to get it out, I'm just a phone call away. But in the meantime, I hope you and everyone out there stays well, has a great rest of the week, a better weekend at the end, and I look forward to seeing you a week from today.
Thanks, Andy, as always, for joining us on Liberty and Finance.
Pleasure is mine.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.